All right, pardon me. G'day, internet. Good to see everybody. I really hope you had a good weekend. Bitcoin sure did. We had a couple of days closing over $60,000 here. Very, very good times. So today, I want to talk a little bit about macroeconomics. And one of my faves here, we're going to listen to it here in a little bit, is Cathie Wood. And in case you don't know, there's been a little bit of back and forth in the last little bit between Cathie Wood and Michael Burry. Michael Burry, of course, famous. He was the first person who took a meaningfully short position on real estate in 2006 in anticipation of the 2008 global financial crisis. And so Michael Burry is convinced we're going to have massive inflation. Cathie Wood is convinced we're going to have massive deflation. And I want to just start a little bit of a conversation here. We're going to listen to Cathie today. We might hear from Michael on another day, although he's a less public person, so he generally just does things in tweet storms. But let's hear from Cathie. Let's talk a little bit about the deflationary side, and then let's go from there. And afterwards, we're going to have a conversation. We'll do some Q&A. Okay. So let's hear from Cathie.
We believe that the price will be tenfold of where it is today. So instead of 45,000, over 500,000.
$500,000 prediction for Bitcoin. Pretty awesome.
Well, in terms of our investment time horizon, 5 years. So we have to believe that one of the technologies, the 14 technologies around which we have based all of our research, is going to inflect within 5 years, or at least be discounted in the start to be discounted in the market as though it is about to inflect. So 5-year investment time horizon, our minimum hurdle rate of return is 15% at a compound annual rate over 5 years. And so I think that that combination of 5 years plus exponential growth trajectories is what is finally starting to get into the market. I've been waiting for years. I believe we are seeing, it's going to be incredibly confusing, I think, to people. Just look at what's happened to the bond market this year. You know, against all expectations, yields have dropped from, I think it was 1.75 at the peak in March down to 1.3 as inflation expectations are exploding, right? We believe the reason for that is that we're probably, when all is said and done and the dust clears from the supply chain problems and everything, we're probably in a highly deflationary world. And we see 3 sources of deflation. One is very good. It's called technologically enabled innovation. Artificial intelligence training costs are dropping 68% per year.
Right.
When a cost drops that much, the demand for it picks up. And artificial intelligence is probably the biggest reason we're seeing the convergences between and among technologies. So we've got one S-curve feeding another, explosive energy, incredible deflation. That's the first deflation.
While the rest of the world thinks, I mean, if you were here for part of the day, everybody's talking about inflation.
Oh, and that's what I love. You know, if the whole world thinks that's going to happen, and a portfolio manager and analyst team thinks that's going to happen, well, if we're wrong, it's not going to matter that much, right? Because nobody's expecting it. It's not in the market. But if we're right, the returns are enormous. And I think that's what's going on with the technologically enabled innovation that we see, especially in healthcare, by the way. But there are 2 other sources of deflation. Disruptive innovation, there's another side to it. It's called creative destruction. And I think we're going to see more creative destruction than we have in all history during the next 5 to 10 years. Now, you can say, oh, you're just talking your book. We have rights law teaching us about learning curves and cost declines that suggest we are going to see incredible booms out there in parts of the world, but it's going to mean tremendous destruction in others. So when I say confusing, I mean that. And then the third source of deflation, I think, will be cyclical deflation. Most people are fighting us on this one. It's hard to fight us given our research on those other 2. But this cyclical deflation, it started with lumber, $1,711 in May. Now we're at $500. Copper, 490. I think now we're at 425. Used car prices are surprisingly good, and I know we're getting pushed back on this one too. They shot up 60% as everybody decided to avoid mass transit last year, right? And now we find ourselves supposedly in a chip shortage. I do believe in the chip shortage. Because
you believe there's a chip shortage.
I do believe there's a chip shortage because the world's going digital. But I believe.
But wouldn't that be inflationary?
Well, I believe chips are the new commodities. That's the point I'm making here. So chips are going to be what Dr. Copper has been in the industrial world. This is Dr. Digital, I don't know, in the form of chips. But you hear the auto industry screaming. Auto sales have dropped from 18.5 million units in April to 13 million. Now, these are annualized rates in August. That's more than a chips shortage.
Okay, so let's leave it there. I want to kind of expand a little bit upon her point. She's predicting deflation she cited 3 different reasons. And, but she also, here's like the catch that most people are kind of like, well, hang on a minute. If you're a deflationist, if you think like the prices of things are going to drop, why are you running around buying up Bitcoin? Why that doesn't make any sense? Because generally, it's high inflation. Bitcoin is a hedge against that. So people are going to be buying Bitcoin as a protection from inflation. So if there's deflation, doesn't the desire to hold Bitcoin go down? Shouldn't we see the price of Bitcoin go down? And so this is a really, really important point. And I want to explain the reason why she's still suggesting that Bitcoin, et cetera, is going to go up. And she has said this in other interviews. But she believes that there's going to be a deflationary event, meaning that there are some of these forces pointing towards deflation. It's going to go down. There'll be a sharp event. But the response to that sharp deflationary event is going to be enormous amounts of money printing. And that's going to be directly. And so I think she does believe that the price of Bitcoin will get hit in the short term. But the response of all of the different asset classes, the response to the money printing that will be required from the deflation, the market's response will be to pile into Bitcoin. I think she believes that it is going to be one of the first asset classes to recover, which is exactly my thesis I've shared with you many times here on this channel. I'm not certain there will be a deflationary event, but if there is a deflationary event, I am certain there's going to be an enormous amount of money printing. And if there is an enormous amount of money printing, the first thing that will recover is Bitcoin. It's going to lead the recovery. Typically, Bitcoin and gold leads those recoveries, and it's several years later that some of the other asset classes explode. That's one of the reasons why I think Bitcoin is such an incredible investment right now. If the world goes through this deflationary event, it is the first to recover, and it's going to just be a kingmaker. If there is no deflationary event, if there is no serious deflation over time, then there was just business as usual, and the governments are going to print. What it means is the government's printed enough to avoid the deflation. That's what that means. I want to go ahead and talk about that a little bit. You guys have seen this chart. I think it's the most telling chart. If you want to be a force for good in humanity, you have to understand this chart, right? This, the orange line is the productivity of the worker, right? The productivity of the worker. How much do they produce per unit of time and resources, okay? And you can see, because technology gets better and better and better, the worker gets more and more productive, right? That's just over time. You would expect that. It makes sense. This line makes perfect sense. The red line is the one that tells the story that we're really interested in here. The red line, once upon a time, when the markets were relatively free and we had honest money, the wages, the red line are the wages of the worker. The wages of the average Joe Schmo worker increased with his or her productivity. Now, it's very, very important to understand. His or her, he may not have owned the tools. He may not have built the factory. He might not have built the assembly plant. But he was just a Joe Schmo wage earner in the factory, in the assembly plant. And he still benefited from the increase in productivity because his wages went up. Yes? Until some event sometime here in the early 70s. At that point, there is a clear trend deviation that we can see. So this goes all the way back to 1945. We hit in the early 70s, and so for the following 50 odd years, we have seen the wages stagnate. But of course, technology kept improving, productivity kept improving. Something happened. Here's something that happened. Well, first of all, let's a little bit deeper on what did happen. What happened is the productivity that that technology produces, the productivity increases that technology that produces, was stolen. It no longer flows to the worker. Some point there was like a deviation put in the river. The money no longer flowed to the worker, and someone stole the water supply, meaning someone's stealing the productivity. And if you're longtime watchers of this channel, you understand what that was. The event in the early 70s was when the US dollar came off the gold standard. When that happened, money became corrupt. And by printing money, they can steal the purchasing power of the wages. See, the wages still went up. As productivity went up, wages went up. However, the purchasing power did not, because the money was corrupted. And for 50 years, we have this, and people say it's like late stage capitalism. No, this is just early stage socialism. It's early stage massive government. It's early stage peak corruption. But this is all because governments have been stealing the wages, not the actual dollars, not the nominal dollars, but the purchasing power of the wages for the last 50 years. All of this occurs because of the money printing. And so it looks to me that by design, how much you can do and get away with is to take as much money as required, print as much money as required, take as much purchasing power as required, so that people's standard of living doesn't go down. Well, that's not true. Their standard of living does go down because the cost of goods and services and houses and education goes up. So what their nominal wages don't go down. If their nominal wages went down for like 10 years, 20 years, 30 years, people would notice and get annoyed. But if you steal just the purchasing power and allow their nominal wages to stay flat, then people don't see it. People don't mind it. People aren't offended. And I've just realized you can't see the graph that I'm looking at. Well, that's silly of me. I'm so sorry. Here's the graph that I was referring to that whole time. Orange wage, again, is productivity, and red wages is the wages. The event, early 1971, completely goes sideways. Yes? I'm sorry, I wasn't showing that for you. My bad. So what we're seeing here is that the productivity is getting stolen. So what Cathie is talking about is that there's going to be a massive technological revolution. And she's, by her model, so she tracks, I think it's 17 or 19 different technologies. And she's saying all of those, like 17, they're hitting an inflection point. They're just about to go absolutely ballistic. What's the inflection point? It's the tipping point on that S-curve. It's where, usage gets to a point where there's so many people using it. Now that means a whole bunch of entrepreneurs step in with that technology, creating businesses to give it to the public. And then the cost of using that product goes down, because that's what entrepreneurs do. They come in, they come up with new and innovative ways to use it. The costs plummet, usage skyrockets, and you just have this explosion for this technology. It's called the S-curve, and we hit the tipping point. So Cathie is predicting that among these, I think it's 17 different industries, artificial intelligence being one, healthcare being another, and cryptocurrency being another. What that means is the usage is going to explode at the same time the cost is dropping off a cliff. Yeah, we see that with Bitcoin. Thanks to the Lightning Network now, as of the last 12 months, absolutely free instant money transfers anywhere in the world. The world's never seen anything like that. It's never seen anything like that. What does that do? So she's saying that you've got these 17 different industries all feeding into each other. One of them is artificial intelligence. So when you've got this artificial intelligence driving trucks, driving Ubers, driving whatever, you've got these instant money payment system that's free. MasterCard, Visa don't get their 3% anymore. All of these things leads into plummeting prices, a deflationary event, deflationary forces, let's be more accurate. Which is a great, great thing. In that term, it's a very, very good thing that the cost of living goes down. It's a very, very good thing that it happens, or should be. However, I know, that all the benefits, right? Your cost of, the quality of life should go up if your costs go down, right? But we know that all of those things are going to get stolen. All of the benefits of those dropping prices are going to get stolen by this mechanism you're looking here. They're going to print the money so that the cost in real terms did not go down. The nominal terms, who knows, but the cost in real terms, they went down. But the nominal terms skyrocketed because of the money printing, okay? So that's what she's talking about. And you have these competing forces, right? The technologists of the world, the entrepreneurs of the world, they're working hard to deliver amazing products to people all over the world. The people's lives should be skyrocketing quality of life. It should be so cheap to live. But what we see is exploding prices because of the money printing. Which one is going to outwin the other? That's the whole debate, inflationists versus deflationists. But here's the magic, in my opinion. If there's massive inflation, massive money printing, and there's just no black swan event, there's no deflation, there's whatever, no worries, it's amazing for Bitcoin. If there's a massive deflationary event, yes, the price of Bitcoin will get hit. But the response to that will be the government will step in and steal all of those gains. Remember, deflation is an improving in the quality of your life, right? When those things go down, your house gets cheaper to buy. Your grocery bills get cheaper. Your education gets cheaper. Your medical bills get cheaper. It all goes down. And so I want us to understand, the businesses don't make less money because the prices come down. Their costs go down. They're able to lower the cost of the goods, but the workers producing the goods, their wages don't need to go down, right? The entrepreneurs make more money because they're fighting to get the cost down of production, but that does not mean wages. I hope that makes sense, right? So the workers can still have their wages, just the cost of living goes down. It should be the greatest time in history for humanity. But there is this mechanism called government which is stealing it. And it's robbing us of that green and sunny future. So I hope that kind of makes sense. Again, to point that out again, if there's a deflationary event, the money printing will come because the government will come in to steal it. They're confiscating the wealth. They're confiscating the quality of life that you would have had from that event. By doing that, they print. The mechanism they do it is by printing, and thus the price of Bitcoin should skyrocket. So any deflationary event for Bitcoin should be relatively short-lived. I hope that makes sense. I want to go now quickly to the charts for Bitcoin. We have this very, very interesting thing happening on Bitcoin dominance. So we are at 47.5. We have cleared this heavy resistance zone here, indicated by this purple box. We are only, so what are we at 47.5. This is 48.9. So we are only less than 2% away from breaking out of this big W pattern I posted here for you the other day. And let's bring in the prediction. Again, the prediction is I think we're going to get up to this line here around about 60%. Okay? If we clear 50, I think we'll get to 60. There's a chance. The two big points of resistance here are this one we just talked about, 49, and this one right here, 53. 53. If we clear those two, then we could be looking at Bitcoin dominance back at 60 before we see the big drop off. So I'm going to keep you posted of that because it's an important part of the investment thesis that I've laid out here in other videos. Bitcoin price 62,300, looking good. And I want to take a quick look. I want to confirm something. The DXY, that's the dollar index. I think we are still range bound here. So yeah, we broke above this line of resistance. We've come down and tested it one time. We seem to be coming down to test it twice, but we've also tested this upper bound twice. Which way this breaks is going to be very, very important for Bitcoin. Okay, if this breaks up above here, that is bad for Bitcoin and pretty much everything. Stock market, you name it. If this breaks down, that's extremely good for everything. Let's go and look at the Dow Jones real fast because it broke above its trend line the other day. Let's get this in here. You can see this very important trend line here. We had like 1, 2, 3, 4, 5, 6 touches and it gapped up and broke above it. So it'll be very interesting to see if we get a significant close up here. So this is on the daily, but if we went to weekly, that we'd still have a weekly close up here. And we did get above that. The big question is that can we get above the all-time high? All right, that's going to dictate whether or not that happens here. If it rolls over, it's just like a dead cat bounce. We're going to come down lower. So it really needs to put in a higher high. All right, let's go and do a quick some quick questions here. If you're in the Discord, you can go ahead and ask the questions in the Ask Max Live area. That's the Ask Max Live area there. And let's get back to this. I'll jump on YouTube here. Probably a whole bunch of people telling me that there was no chart. I apologize for that. Sorry for being slow on that. Let's see. Looking for questions. Question. You can really help me out by putting a question mark in your comment. 2017. All right, some comments there. No, and people helping me out, telling me that there's no chart. Thank you, thank you, thank you. Oh, here we are. Well, there's people. All right. So if you want to ask a question, guys, go ahead and ask them now, because we're going to wind up here in a second. And yeah, we just have this, while we're doing that, I do just want to touch on-chain analysis. The long-term holders have really stepped up their game the last few days. And so we haven't, we've never ever seen this big a percentage of the Bitcoin supply be held by long-term holders. This is wallets that generally don't sell very often. I think we're at something like 82% of the Bitcoin supply hasn't moved for the last 90 days. It's just sitting in people's hodl wallets, they're holding it. And what's going to happen here is if we get some serious FOMO, if we get all-time highs, if an ETF comes out, if all these things happen, then there's going to be a lot of people jumping in trying to buy Bitcoin. However, they're not going to be able to get it because the supply is held by people who are not willing to sell. Not at these prices, not at only $60,000. If the price gets bid up really fast, then some sellers might come onto the market. But for right now, that just doesn't happen. On-chain analysis is screaming like it's never screamed before. Buy, 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 buy. We are about to go into a multi-month, massive, massive bull run. That's what on-chain analysis is telling us. The markets are looking a little bit healthier right now. The Dow Jones broke its trend line. That's a good thing. The only thing, the markets were looking very, very shaky. Very, very shaky. If there's a big black swan event in the markets, the Bitcoin price will get hit in the short term. And so I just want to say the markets look a little bit better. A little bit better. Dow Jones breakout, good for Dow Jones. Dollar still trading in that range. And so that's the big test that we're seeing right now. That's what we're going to have to watch. I want to talk quickly. I'm getting a question on, actually, we just got a question on Rune. I'll check that real fast because I'm curious about that. Where's my Rune? I think it's around $7, $8. Where are we? Rune. Dollars. $7.50. $7.50. Good stuff. I'm excited. Good accumulation point for Rune. Rune is one of those DeFi projects. It's because it incorporates Bitcoin. When Bitcoin goes up, Rune typically goes up as well. And so Rune is a very nice. I'm very, very excited for Rune. Very, very excited for Rune. They've sorted out a whole bunch of their problems the last couple of months. And I don't really know why it's still only $7.50. Actually, given that, to my knowledge, Bitcoin trading is back on, BNB trading is back on. You can swap back and forth. I think Ethereum is still closed. Don't try and swap Ethereum until I hear otherwise, unless you know better. Rune is back and operational. And so that was a great buy time during that time. I think it went all the way down to $2, which was just exceptional. Now it's at $7.50. I think that's a good one to keep an eye on. Let me think. There was one other thing I wanted to talk about, and I got distracted with the Rune comment. Oh yeah, ETF. So let's talk about ETFs really quickly. So there's just so much things. The ETF is not officially approved. It got approved by the NASDAQ. So that's one of the real thing we care about has the SEC approved. Everything else is formality. If the SEC approves the Bitcoin ETF, then that's the magic sauce. Then it will happen. When it happens, there's several other ducks that need to fall down. The NASDAQ needs to approve the ticker symbol. The other bits and pieces need to happen. So on, I think it was Saturday, or maybe it was Friday, one of the companies that is going to get a yes or a no by the SEC on their Bitcoin futures ETF, they went and started doing the other steps. They went and got their ticker symbol put on NASDAQ, and they seem to be doing the things that you would do if you were approved. But there has been no official announcement that the SEC has actually approved it. That is due to happen. Actually, I think it's due to happen today. The first one is due over the next 2 weeks. There's 5 different deadlines for ETF approvals, and the SEC is going to choose that. So they have to rule thumbs up or thumbs down on 5 different applications. We haven't got an official approval yet, although I believe one of them, the due date is today. So that's going to be very, very interesting. It could be happening right now as we speak. And I would say the Bitcoin futures ETFs are an inferior product to the Bitcoin spot ETF. I do want everybody to understand that. But it nonetheless is a step into a good direction. It's a step in the right direction. It's a good sign, and I think it makes the Bitcoin spot ETF inevitable. It just, I don't know. Well, I do know why. So the SEC said that they're much more comfortable with a futures ETF rather than a spot ETF. My opinion, the reason that is because it makes it easier to control and manipulate the markets. My opinion only, right? In the world of gold, in the world of silver, in the world of commodities, the tail wags the dog, meaning they can, with just billions of dollars, they can control, they can buy and sell futures, and that controls the spot price of the gold and silver. Now, there is a very, very different world with crypto. Taking possession of gold, silver, copper, it's all miserable. You don't want it. Huge transportation costs, huge security costs, huge storage costs. You don't want to take possession of any of those things. It's a nightmare. Bitcoin is different. It is so easy and so cheap to take possession of that people are going to want. Now, these futures ETFs, I've looked into them and they are all cash settled. It's just a casino. You can buy Bitcoin futures and have exposure to the Bitcoin price, but you cannot say at the end of the futures contract, great, deliver my Bitcoin. You cannot do that. You must take cash settlement, right? So if now the futures market, if a whole bunch of money pours into the futures and say we want to buy, we want exposure to the Bitcoin price for the long. What the company offering the service, if they were running a sound and good and easy business, what they would do is they would go and buy the Bitcoin. And that way, they don't care. Price goes up, price goes down. They don't care. However much money came in, they just took it, went there, and they make their money on fees. They don't care if the price of Bitcoin goes up or down. They're not gamblers. They're a financial intermediary. Money comes in a nice, easy way that hasn't been able to come in that easily in previously. They just go and buy the Bitcoin, do that work, and then they're just making money on fees. However, what we see in other markets is that these institutions now who are running that, once that builds up and the volume is there and there's so much money being traded on the ETFs, they can actually wag the dog. It's the tail wagging the dog. They can actually control the price significantly, and the spot price of Bitcoin looks at the futures market to see what its price should be. So I believe it makes it much, much easier to control and manipulate the price of cryptocurrency with these future ETFs. So I'm not a massive fan of them, but I think it will be a pump to the market. So that is kind of a good thing in the short term. But ultimately, Bitcoin is a special animal. Eventually, companies are going to see this and go, you know what? Because we've tried silver, I say we as the world, has tried to do short squeezes on silver and tried to corner the market, tried to do it on gold. But the problem is that just the futures market just kills it. They can just continue to run at a loss to keep the money printing going. And so they just keep the price until people get worn out. So, but Bitcoin, the blessed thing about Bitcoin is the cost of delivery is so low. And it doesn't really, eventually, enough people will say, no, I'm going to take the real thing. I want Bitcoin. I don't want exposure to the price. I don't just want to make the money. I want the real thing. Give me the Bitcoin. And there is another financial benefit of that. If you buy the Bitcoin and just hold it, there's no taxable event because you never sold it. When you're buying and selling futures contracts, it's constantly a taxable event. You're buying and selling, they're expiring, you have to roll them over, right? When you buy the spot, you own the Bitcoin, you just hold it for 10 years and there's no capital gains event. So there's a very different tax situation on the two different systems. So just so you know that. All right, All right, we're going to close it off there. I want to thank everybody for being here. Remember, we're going to do this every Monday through Friday at noon Eastern. I'm going to do this. I'll be available to answer your questions. We'll take a look at what's going on in the market. So please go ahead, subscribe to the channel, hit the like button, and I'll see you guys soon. Take care.